Hello everyone. In our latest update for 2023, there are potential opportunities as heat comes out of the market. There are early signs of softer subcontractor pricing and improvements in supply chain capacity. However, this is weighed against a difficult debt market for new speculative work. Today, I'll run through a macro overview of market conditions. Mike will cover construction output and the latest in construction material trends, while Rachel investigates the labour market, energy prices, and the ongoing issues of insolvencies. Let's dive into the macro overview. Overall, the UK economy has performed better than expected. However, the Bank of England doesn't anticipate further growth until early 2025. Although CPI inflation fell sharply to 4.6% in October following a reduction in energy costs, prices are still rising at more than twice the pace of the Bank of England's 2% target. This recent drop has fueled discussions about potential interest rate reductions in 2024. In the job market, the UK's unemployment rate increased slightly to 4.3%, compared to 4.2% in the previous quarter. This signals that the tight labour market might be beginning to cool.
Although the rate of construction output growth has slowed in recent quarters, a marginal increase of 0.1% in Q3 marked another record high. New orders unexpectedly rose 3.9%, ending 3 consecutive quarters of contraction. However, new orders can be volatile, so this may not reflect the start of an overall trend change. Now let's turn our attention to materials. Construction material prices in September were 1.8% lower than a year ago, marking the 4th consecutive monthly decline. Doors and windows, as well as gravel, sand, clays and kaolin, had the largest increases, while structural steel and rebar continued to fall. That was due to subdued global demand, lower energy prices and improved product availability. In contrast, ready-mix concrete prices rose over 14%. This is driven by elevated cement costs, increased labour expenses and stronger demand for low-carbon variants. One to watch next quarter. The World Bank has warned that an escalation of the conflict in the Middle East could impact global energy markets and material prices. However, the conflict's effects on global commodity markets has been limited so far.
Construction job vacancies have decreased in line with a slowdown in construction activity. In addition, construction average weekly earnings growth softened to 4.5%, down from 5.5%. However, driven by demand exceeding supply and Brexit impacting the European labour market, the long-term trend for construction earnings is still one of significant upward pressure, which we anticipate to impact overall costs for the foreseeable future. In terms of energy, European wholesale natural gas prices have increased by 54% in the past 3 months, while Brent crude oil prices are around 2% lower. Over the coming months, energy prices could be further affected by a cold 2023-24 winter, any rebound in Chinese demand, and, as Mike mentioned, any escalation of the conflict in the Middle East. In a continuation of our advice from last quarter, the relationship between high interest rates and construction insolvencies is evident, currently 7.6% higher than a year ago. There is therefore an ongoing need to mitigate against the risk of insolvencies within the supply chain. You can find advice on mitigating against this risk in our full market update report.
Our key takeaways for this quarter are: firstly, there may be opportunities as subcontractors look to pass on stabilising material costs to secure work. Secondly, we're seeing improving capacity for main contractors and early trades. And finally, looking ahead to next year, the focus is likely to shift to refurbishment and sustainability projects amidst the potential challenges of the debt market. Remember, the market is constantly evolving, so stay tuned for our future updates where we'll continue to keep you informed about the latest forecasts.
To find out the details behind the headlines, visit G&T's Market Intelligence microsite and get in touch with our experts today.